All right, ladies and gentlemen, we come to the very next session for the day on a very interesting topic on KYC innovation, which includes digital onboarding and developments. And this will be presented by Ms. Shamim Banu, the AML specialist for Commercial Bank Qatar. To quickly introduce Ms. Shamim, she's a solutions-based AML specialist with over 8 years of experience in transaction monitoring, sanction screening, client onboarding, and global banking with a rich experience in customer due diligence, negative news, PEP, exhibited excellent team building and people management skills by driving the team towards common goals and objectives set by the organization. A very warm welcome, Ms. Shamim, to the
Thank
MENA
you.
AML and Fraud Conference.
Thank
I
you,
would
Mr.
definitely
Anil.
look forward to your session.
Thank you.
Have
Thank
a
you so
nice
much. Thank you. Okay. You can see my presentation?
Yes, I can.
Yeah. Okay. So let's start. First of all, good afternoon, good morning from wherever the people are here. So let us start the presentation. A very warm welcome for the ladies and gentlemen for giving your time to understand my presentation. And I'm Shamim, as Anil has already introduced me, and I work for Commercial Bank of Qatar, and I'm an AML specialist. And firstly, the thing what I'm presenting is based on my experience and the data whichever is available from the primary sources or the secondary sources from the public platform. Okay, let's begin. So my topic is know your customer, innovation, digital onboarding, and developments. So let us first understand what is KYC. So here I'll be telling in my presentation like a very simple definition of KYC and the KYC process, why KYC is important in financial institutions, biometric authentication, artificial intelligence, machine learning, electronic identity verification, blockchain-based KYC, and non-adherence to the proper KYC can lead to many risks. Okay. So the thing, KYC, as everyone knows, what is KYC? Know your customer, know your client. In very basic terms, like whenever we are having a relationship with the customer, we cannot just blindly have a relationship, right? Whether it can be banking sector or it can be either any other non-banking sector, we need to know what is the customer. So this is very basic understanding, know your customer. This is a series of processes put in place to verify the identity of the customer before financial institution can conduct businesses with them. A very simple example. Whenever the customer is coming, we cannot just blindly, as I said earlier, we cannot just blindly go to the like have a business with the customer without understanding what is he. So the first thing starts the KYC. Then the next thing starts is how are we gonna proceed? Whether we are interested in the customer or else we don't want to make any business with this customer, like that. Okay. So the second slide I would be saying KYC importance or KYC process. For me, I would definitely feel KYC as a heart of human system for the financial institutions. Without proper KYC, we are gonna face many challenges in the financial sector, or for that matter, any financial or non-financial sectors. If we don't have any information about our customer and we started doing businesses, then we can be putting our institutions or we can be exposing our institutions for the many risks, right? So we need to know what is the customer, who is he, what is he, like who are the beneficial owners, and whether if it's an entity, whether it's a regulated one or else it's not a shell company. And if at all if there is any PEP is a politically exposed person, so I come like I worked with that as well. So we need to understand like whether in the person, the client what we are onboarding, whether holds any powerful position which can actually leads to the ultimate decision making, and which can have very financial crimes, like a very predicate crimes as well, where their decisions can manipulate, for example, any insider trading for that matter, or the tax evasion for that matter. So all these things, like we need to understand before proceeding with the customer. Then why KYC is important in financial institution? You know that like we are, for example, I just want to say this thing like we have I come across a very traditional based KYC when I started my career. where we used to have a paper based KYC. But now if you see, the advancement is so much that we have many of the applications which actually gives us importance of KYC. So we can see the advancement what it has taken in this aspect. Why we have so much of advancement in KYC? Because of the frauds happening across the globe. If we see the element of risk when at the time of onboarding, or at the time of less collection of data about the customer, or like we are onboarding some shell companies, what and all of aspects we have seen in the banking industry for that matter. So what happens when we are not having a proper KYC? Regulatories come back of us, they fine us, they will take our license. Most important, like we lose a trust which will can never be gained, right? So this is something very important for the financial institution to have a proper KYC. And what is the proper KYC? I would be discussing in a very basic terms, like a framework of KYC. What it is, the first thing is client identification program. It's not like any customer, it's like one size fits for all. This was a topic where we are discussing from yesterday, right? We cannot go a big organization to have a very small KYC thing, or a very small KYC, a very small organization to have a very big KYC implementation, right? So we need to understand what kind of a customer we are accepting when we are onboarding it. So we need to have a client identification program in segregating the client, whether it's an individual client, whether it's a high net worth individual, whether it's a company, whether it's a partnership firm, like that, where we will be knowing a customer based on the geographic standards as well as country specific standards, right? For example, if we are onboarding a customer which is a very well regulated entity, and it's in some very what we say, in such country where the regulatories are very good, like for example, if we say Canada, if the regulators are very good and we are onboarding a customer here in Qatar, then we actually take a leverage over there, because the company is already under regulatory perspective. So we will categorize it as low until unless they don't have any PEPs, again the risk evaluate over there. So but in case if you are onboarding an entity, and that entity in some weight, right? So all these things to be mentioned in the CIP, or the client identification program, where a frontliner should be knowing it at the time of onboarding a customer. The second is customer due diligence. It is like something, once we know the customer, we need to have a proper information of that customer. This is what I was telling from the first slide. We need to know what is the customer. Like we cannot just blindly go like whatever the documents has been given by the customer. We need to have our sources ready. We need to have our information ready with the primary or the secondary sources to understand the person to whom we are onboarding, whether legitimately he will be benefited to our company, our bank, or else we are just boarding one person whose identity we just know only because of the documents what he gave, but there is some other beneficial owner who is making this person as a middle person and making himself as onboarding to us, right? We need to have a proper due diligence. In that we have simplified due diligence, again low risk categories. Then we have enhanced due diligence, if at all, if we have PEPs or any high net worth individuals where their decision matters. Then we have continuous monitoring. Once we onboard the client, the next is we will not stop there only, right? We will be continuously monitoring, right? We cannot just stop the client onboarding, and we cannot just expect, okay, the client will never change. No, that expect will be wrong. So we need to have a continuous monitoring about the customer, his transaction analysis, his activities, what he's doing at the time of onboarding, what did he say, and after maybe if we say high risk, then after 1 year what is he doing, or certainty, like whichever arises before. Then, yeah, this is something a very advancement which has happened in the KYC world: biometric authentication and digital KYC. What it is? It is something we need to understand. Initially, whenever we had identification, we used to give our ID cards, right? We never had a biometric thing like where you give your fingerprints, your eyes, your all these things will the data will be captured, and we were not that advancement what at present we are. So this is something of very much importance being given at this present time. This biometrics, what it is, it's explicitly explicitly binds individuals to their identity, digital identity, in the online world. This is a key to preventing identity theft and fraud issues. KYC with biometrics is strongly on the rise to prevent identity fraud. Then, what is next? Onboarding. When we need biometrics, we don't need biometrics when the client is onboarded, we started business, or we started the transaction history with him. Then we cannot go for biometrics. Biometrics is something frontline when we are onboarding. Then this is something where we are telling customer, you trust us, we trust you. Then digital ID, what it is, it plays a very identification, it is a role, like it's a very important role where the customer have a unique ID, or for that matter the company have a unique ID, where we can get more info whenever we are giving that unique ID, rather than having different IDs for different customers. It will be less time consuming whenever we are having any suspicious on that customer, for that matter the entity. So, this is the explanation how this digital ID plays a role at various stages when using financial services. First, easier for unbanked to open a transaction account, which also enables efficient disbursement of social benefits like pension categories, enables cost effective onboarding that can be done remotely by the FSPs, financial service providers, contributes to the deepening of the financial sector by supporting taking up of additional product and services. Furthermore, digital IDs allow for validation a customer's identity with higher degree of assurance than those using manual or paper-based processor. This is what I was to say. It's an advancement of what we were doing earlier. Then, this is a definition which is actually, even the FATF has given importance on this. This is a definition by the FATF which says digital ID system use electronic means to assert and prove a person's official identity online and or in person environments at various assurance levels. Then this is something a pictorial representation like how the digital ID is usage in the financial services. As I was telling, it's digital ID. It's related to customer onboarding. It will be helpful for additional account opening. It will be helpful for customer authentication and ongoing monitoring. Then this is something very interesting, like as everyone know what is FATF, right? Financial Action Task Force. So Financial Action Task Force have actually given the recommendation 10 whole and solely on KYC. Why? Because they also got to know. First of all, I would like to tell what is FATF. FATF is a governing body. Okay, it's not a regulatory and they don't penalize, but their recommendations are valuable because on those recommendations, the FATF recommendations, the country's financial the stability will be knowing, what we say, it has its own importance, like the observations given by the FATF, it has very important for the country's development. So what it is the FATF has told. They have given in the recommendation 10. CDD is nothing but a KYC again, the customer due diligence measures. They have given a very specific important thing under recommendations 10, knowing what is customer, what are the measures we need to take when we are onboarding a customer, or when we are having any suspicious activity running, or when we are seeing any patterns, or when we have exceeding the limit, if at all the customer have exceeded the limit at the time of the transactional activity. So this is a very self-explanatory, but I just want to go through it. The first thing is business relation, which says face-to-face or remote onboarding. We need to know the customer, right? Second, we need to follow the CDD measures whenever, if we see any transaction, or for that matter, any occasional transaction has exceeded for the customer. For example, if you have onboarded a customer has a person as a driver, no offense is just an example, okay, as a driver. So these salary limitations is like per month they'll be having some 5,000 Qatari riyals, but at the time of onboarding it's 5,000 Qatari riyals. Then after 6 months or 7 months, if we see the transactions are beyond his capability, cash deposits for that matter, or structuring for that matter, or or if at all if the withdrawals for that matter. So this and all we need to be considered. For that reason I said, ongoing continuous monitoring is very much required. So any of these has taken place, like occasional transaction, then we need to see what is the customer doing, and if we file this is suspicious, if we think this is suspicious, or if we have got more information that this is suspicion, then we need to file a suspicious activity reporting. Then we have patterns. Then again, the same example with the driver having the 5K salary and having a structuring or a layering, or if we see the customer is just depositing in and you have a very quickly withdrawals, this and all actually leads to suspicion. We need to see whether we do see any patterns in the customer. Then we have what is like, whether if we get any information from the QFIU saying like we have a inquiry on this customer, then we should not be waiting only like what QFIU is doing saying. We need to go ahead and we need to check if at all if the customer is onboarded by our bank. Then we need to be very careful analyzing his transactions, and if we find any suspicious, then we reporting it. So then artificial intelligence and machine learning. Then as I'm sorry, as like we have a more information on the advancement of KYC, then definitely this is what now this is going: artificial intelligence and machine learning. How it is useful. While use of new technologies can improve risk assessments, onboarding practices, reporting, and governance processes for regulated entities, it can also help detecting suspicious activity in a timely manner. Similarly, these technologies can strengthen supervision based on informed oversight and real time monitoring. Then, adaptation. Adoption of diversified technology can enhance all stages of money laundering and AML CFT processes, whether use of artificial intelligence or that matter any advanced applications. Then the blockchain technologies. Blockchain technologies is something like, which it gives a different ways of managing digital identities, as they provide innovative solutions for identity authorization, verification, and personal data management. It would follow a decentralized model of ownership, management, representation, and attestation of the identity. Then, what happens if we don't have a proper KYC channel in our banks? As usual, we will be fined, we will be penalized. For that matter, our license will be revoked, right? So, what has happened? Failure to do so can result in fines and prison sentences. Affected companies often suffer reputational damage. In serious cases, business permits may be withdrawn. A KYC check is therefore no longer just something for companies in the financial sector. Organizations in all sectors need to take them seriously. As I told you, it's only not for the banking sector, it is something non-banking sectors as well. We need to have a proper KYC. If we don't have, then we will be having a very lot more fines which we have to face. Then what happens with the fines? We will be posing our bank to risk. For that matter, we'll have operational risk, reputational risk, and the shutdown. Like, as everyone know, nobody wants that, right? Then this is a very basic and two examples I have taken, like what has actually happened when they did not follow the proper KYC. The first thing is Scandinavasika and Sikda Banken. Sorry if at all if I pronounce this wrong, but this is a bank actually they did not have the proper KYC channels in first place, and they were charged for $107.3 million fine for not adhering to the proper KYC. That's huge, right? Any bank don't need this, right? Then we have a very reputed bank, Deutsche Bank AG. Even these banks also been fined. In fact, not once or twice, it's thrice for not having a proper anti-money laundering standards, policies, or procedures, or the proper KYC norms. They have not followed it. So, what are the key takeaways? What I learned in all my journey of my 8 years? The first thing, enhancing the customer experience during KYC refresh should be top of mind. That is the first thing when we are having a KYC with us, when we are having a customer with us. We need to have a proper info of the customer. It's just not like onboarded and left. No, we need to onboard, then we need to continuous monitor. When we see suspicion, then we need to file a suspicious SARS for that thing. Then technological advancement. We cannot just have the what we say, the very simple paper based KYC what we were using it before. We cannot follow the same thing now, right? Technology advancement is something very important. That like time is just passing. Every bank, every organization need to update themselves. I know it's very cash rich, I know it's not everyone is interested in that, but we need to do it. So because if we want to have advanced technology, if we want to make our bank not to pose any risk, then we need to have a technological advancement. It means we need to go along with the flow what the new technology is been given. Then, what happens when we integrate new technologies, CDD and KYC measures? Innovative technology promotes financial inclusion, considering enabling more financially excluded segments and to provide robust AML and CFT framework. Since innovative technologies can improve data collection, processing, and analysis processes, they can best support compliance with AML or CFT requirements and mitigate effectively the related risk from one hand to other. Okay, this is the end of my presentation. Hope I gave very small insights because I have definitely had a very well experienced people from yesterday, and their presentations were very much like overwhelming and a lot of answers for my questions. But hope my presentation made a bit interesting, and you got light information of KYC. Thank you so much.
Thank you so much, Shamim, for the presentation and sharing your thoughts on the entire journey of KYC and what are the pitfalls and what are the challenges that most of the banks are facing right now, and of course, what are the after effects of it, right? Thank you so much for your time,
Thank you,
and we will
Anil. Thank you so
definitely look
much.
forward to your future sessions as well.
Thank you so
Right?
much. Thank you for
Have
inviting
a
me.
nice
Thank you.
day.
You
All
too.
right.
Thank
All right.
you. Bye bye.